Ladies and gentlemen, welcome back to the channel. Here in this video, we will go over everything you need to know for this week. It is officially the start of earnings season. We will also go over any and all important economic data coming out, and we do have the CPI report, which will be this week, and that is the most important data of all for our markets. Nothing is more important than that. So we'll discuss these things. We'll go over AMC stock. We'll look at the option activity where options are implying AMC stock could go, the technicals on AMC, all of that, and try to come to a realization of where AMC stock could go this week. Now, there's going to be two possible outcomes to this week because of the big data with CPI. Not as much earnings, but we do have some big earnings coming on Friday. So we are going to get into all of this. Hit that like button and subscribe to the channel. Let me know what you guys think about this information. It is, I will say, about time we get a rally in AMC stock. So that is what I will tell you. I'm leaning towards right from the bat, considering the stock is, well, sitting with an RSI of 24.74, extremely on the oversold side. So let's start off first things first with what's going on in the broader markets this week. We'll switch into AMC and then at the last bit of this video go over where I actually think AMC stock is going to go, because I don't know where AMC is going to go until I look at all this information. Now, here is the calendar for the most anticipated earnings releases. There could be others, but these are really your big guys. Nothing is going to be that important at all until Friday. You do have some notable names. Wednesday, KB Homes will actually be pretty important as well, because, I mean, if the home builders can build more homes, maybe there's less housing inflation. So you actually want to see KB Homes do well, and we'll ultimately see what does happen. Home builders have overall done, pretty well over the past 2 years. So we'll definitely see what direction that is going in. And that is on Wednesday and after hours. Now, Friday pre-market is when you're going to get really all of the big earnings. That is when you are going to get JP Morgan, United Health Group, Delta, Bank of America, Wells Fargo, BlackRock, Citi, BNY Mellon. If there is not good things from these earnings, there is going to be a bit of a problem. So as far as the earnings outlook, just Friday looks like a big day. Wednesday and after hours, I mean, the home market is very important for inflation and ultimately the economy as well. And it seems like the homes market has really been slowing down. A lot of people expected rates to fall from 8 down to where they were at about 6.5, that would boost a lot of people to sell their homes and buy new homes. And actually the mortgage applications fell when rates fell. So, this is a market where not a lot of things are going to make sense all the time. So we're trying to make sense of the unsensible, which is a very tough thing to do. Now, here is the trading economics calendar for this week. For Monday, tomorrow, you really don't have much. You do have Fed Bostic that speaks. We want to see if he says kind of the same things as Fed Logan. If this is coordinated to try to basically push the markets in this direction of slowing down quantitative easing. This is what Fed Logan said on Saturday. If you start to hear Fed officials saying the same thing, other Fed officials, well, the markets are probably going to take that as good news. Again, this market is unsensible. It's hard to make light of what is going to happen, but that would be my best guess. Also on Monday, you will get consumer credit change for November. We're expecting that to be positive, about $9 billion. Considering the holiday shopping season, that would make some senses. We are also going to get used car prices month over month and year over year as well coming out Monday, and that's a big area we want to be watching because it unfortunately just has a large weighting in the CPI relative to other different components. Now, on Tuesday, we're going to get NFIB Business Optimism Index. That comes out at 7 o'clock in the morning, 6 o'clock in the morning. I don't think it's going to move all too much. We're expecting 91, so some pretty good numbers there nonetheless. Now you are going to get TIPP Economic Optimism Index. We're expecting that at 41. That number doesn't look nearly as good as the other one, and that'll come out at 10 o'clock in the morning. You are going to get a 3-year auction, bond auction, but other than that, not a whole lot of data coming out Monday and Tuesday. So I think Monday and Tuesday could be your days of actually seeing a little bit of a bounce, considering we've seen so much selling so far. Now on Wednesday, lots of oil data coming out. All of this is oil data. Now you are also going to get wholesale inventories month over month. That's expected to be 0%. So less inventories typically is a good thing, but we'll obviously have to see. Fed Williams will be speaking at 3:15 on Wednesday as well. You do have a 10-year bond auction. That will be important. Those 10, 20, 30-year bond auctions are important because they're not dictated by the Fed. They're more so, dictated towards where markets imply rates are going to be. Now on Thursday's your big day. You're going to get core inflation month over month. You're expecting 0.2%. Last month was 0.3%. Core year over year expected at 3.9%. Last month was 4%. Headline inflation month over month is expected at 0.2%. Last month was 0.1%. Your inflation rate year over year is expected at 3.2%. 3.1% was the number last month. So across the board, you're really expecting inflation to almost re-accelerate. Your core month over month number is expected to be 0.2. Last month was 0.3, so that's technically a little bit of a deceleration, but we've been around 0.2 for core, and that's around 2.4% on a 12-month annualized basis. Core has come in at 0.1 a couple of times as well. That's where you get the 6-month annualized core at, around 2%. That's currently where we are. Now, core year over year is expected to fall a little bit as well, but your headlines are expected to actually rise, right? From 0.1 last month to 0.2, and from 3.1 to 3.2%. I actually think you're set up with very high expectations that inflation did not improve much. So what that means is I think these numbers are probably going to come in way lower than what the actual estimate is. I think core month over month could come in at 0.1%. I think year over year core could come in at 3.7-ish%. And your headline could come in at 0.1 month over month. And your inflation rate year over year could come in potentially under 3%, maybe 3% or 2.9%. Now, this is only just my speculation. I really don't know for sure. But it does seem like there's high expectations in this week's CPI report. And that could set us up for a rally in the markets, potentially. We'll also get initial jobless claims, expecting that to be around 215,000. Initial jobless claims tends to be a leading indicator. So if somehow we do get a large increase, well, that's not going to be great. This is for the week of January 6th. So it's after Christmas. So it wouldn't surprise me if we did see quite an increase, just because holiday hiring is that's usually when you start letting people go again, is after Christmas. Now you will get a bunch of bond auctions as well. Thursday, 30-year bond auction will be coming out at 1 o'clock p.m. And that will also be important. You are also going to get the monthly budget statement, expecting that to be about negative $90 billion. So yeah, Thursday's definitely going to be your big day. For Friday, you are going to get PPI as well. You're expecting that at 0.1%. I don't think PPI matters too much because I don't think it's going to be negative as far as an impact to the markets. You're already so low. I mean, you might actually go into deflationary numbers, and maybe that wouldn't be so great. We'll have to wait and see. Fed Kashkari is also going to be speaking at 10 o'clock in the morning. And that is pretty much it for your week. So a couple different Fed speakers, PPI and CPI. the main stories of what's going to be happening this week. And again, I just think we're set up in a way to be able to beat those numbers, current expectations. But I mean, we've seen crazier things happen, so obviously that's not a guarantee. Now, for AMC stock, if you take a look over here at the Ortex data, give you a brief rundown of where things are currently at for AMC. You do have short interest of free float, 8.05%, $106.96 million worth of short positions. Days to cover, 0.98, 20.18 million shares that are currently out on loan, 16. That are currently sold short, 16.01 million shares that are currently out on loan, cost to borrow 1.08%, utilization of 29.99%, and a short score of 52.48 out of 100. So really nothing too crazy over here. I don't think these numbers are accurate at all, not in the slightest bit. But that's just my personal opinion. Take it for what you will. Let me know what you think down below in the comment section. So if we take a look at the past week, you have seen 17 orders totaling $1.8 million with a positive order value of 20%. So the last week itself was, not that great as far as hedge fund and institutional option activity. Now, last week we also did get a price target reduction from B. Riley Securities. They took it down from 15 to 12, which was still seen as positive because you're still implying AMC stock could more than 100%, could still see a more than 100% gain from here. So that was good. That was from B. Riley Securities, and that has been something that I would have hoped would have had a larger impact to AMC stock, but it was kind of short-lived. Right. Now, if we take a look at the Stocko Tracker data here for this upcoming week, you do have 1,000 calls currently in the money, 40,000 calls out the money, 16,000 puts in the money, and 10,000 puts that are out of the money. So definitely more option activity to the call side, but not a big expiration at all just by itself. For January 19th, we are going to have our large expiration. Have about 1,800 calls currently in the money, 174,000 calls out the money, 65,000 puts in the money, and almost 60,000 puts that are out of the money. So that will also be a very large expiration. By the time we actually get to that, we're going to be seeing likely some very big numbers for January 19th. So there is that. Again, we want to be watching treasuries. If we can see treasuries start to reverse some of the rally that we have seen, that would be great. 10-year treasury yields currently at 4.05%. This is up from 3.78%. This is part of the reason why stocks have likely been selling off in the start of 2024 as well, just because 10-year treasuries have been working against us. The dollar even has been working against us historically. When the dollar goes higher, stocks go lower, and that's exactly what has been happening over the past couple of days. What we've had 1, 2, 3, 4 positive days for the dollar, and what we've had 4 negative days for the markets back to back. So definitely keep that in mind. Now, if we're looking at the broader indexes like an IWM is now with an RSI of 50.98. So definitely on the neutral side, starting to get closer to being oversold, which seems crazy just because, we're still a lot higher than we were before, but the sell-off's been pretty aggressive so far. So I am expecting to see a bounce. Now, with AMC stock, the RSI is 24.74. The main problem with AMC is all of the dilution. Shorts don't want to cover on short positions because they know there's just going to be more dilution, right? What's the point of covering on a short position if Adam Aron's going to dilute shareholders and the stock's going to fall more? I would hope to see any day now, Adam Aron commit to not diluting shareholders for a period of time. Maybe that is 6 months or however long it is. That would be great news, and that would start a much larger rally. But without that happening, I do think AMC stock could make its way back to about $6 per share this week. Relatively easy. $6 to $7 per share looks relatively easy. The 50-day moving average is at $7.51 per share. I think that would probably be another shorting opportunity from the shorts if we don't get anything dramatic happening. Now, we do know Fed Logan said the Fed should start reducing their asset runoffs. If that is seen as a really good thing by the markets, and let's say money comes back into our markets based on that, well, then that could cause AMC stock to rally further. I just don't know how that is going to be taken by the market. So we definitely want to be watching that and kind of see where things go from here. So there you have it. That's my upside prediction. $6 per share should be pretty easy. $7 per share to get all the way up there, it probably means the markets had a pretty good week, right? But $6 per share, could you see that on a bounce? Of course. If things go sideways, and let's say we have another rough week for the markets, then yeah, you could fall down to about 450. That would be my estimate. If we had really bad news, like more dilution, then AMC stock could fall down to the low fours, and that would obviously not be great. Again, AMC's RSI really on the oversold side, so we'll see. We should be getting a bounce based solely on that, but it's hard to say. It's hard to say, that's for sure. The MACD is also pretty neutral. It's really not doing a whole lot of much, just kind of treading sideways here. So yeah, I expect that's going to start curling down as well pretty soon. So we will ultimately see. Let me know what you guys think about this information. What is your price prediction for this week with AMC stock? Hit the like button as well as subscribe to the channel. Thank you guys for watching. Enjoy the rest of your day, and I will see you in the next one.